I'm Hannah Wallace and welcome to FinextraTV. Calling into our virtual studio today off the back of Money 2020 is Annerie Vreugdenhil, Chief Innovation Officer at ING Neo. So Annerie, without further ado, welcome to our virtual studio. It's good to have you on.
Absolutely. Good to see you again, Hannah. It's a bit of a pity it's virtual, but it's absolutely great to see you. And thanks for having me.
That's right. I'm hoping next year we'll be back in the studio face to face, but it's good to see your face regardless. And I guess we're talking about a big topic that's going to be covered at the event this year. And there's been increasing discussion around financial services becoming a commodity, the evolution of embedded finance and how the competitive structure of the industry is changing, which I'm sure every bank and financial service company is currently trying to grasp, aren't they? So I think it'd be a good place to start if you could set the scene and highlight where we're up to at the moment as an industry. Let's start there.
Yeah, well, I think the topic is not completely new. So already for a number of years, we especially have seen in the payments area that embedded finance, as we now call it, but basically other players than banks creating new infrastructure to make payments more efficient or help customers to make it easier, has been going on for a while. And I think especially there, we've seen the power of this kind of disruption, right? So there's some very, very strong players that have taken parts of the banking business that will not be coming back. But actually what you see now is that it broadens. So the reason why this is such a hot topic at the moment is obviously because it gets into lending, it gets into insurance. So even more of the traditional banking services are actually starting to be part of this trend, and other players than banks are starting to be super active there.
That's really interesting. So thanks for setting this scene then. I know investors have got their eyes on the developments as well. But tell me a bit more about that. What's driving this shift then? And what do you think the potential impact will be further down the line? And what sort of role do you think it will play moving forward?
Well, if you take the lending trends, for instance, also that is not new. I mean, we have had web shops for decades, basically, that also offered lending services. So it's not completely new. I think what is new is that there's new players that make it so easy. Mm-hmm. So where a lot of disruption obviously takes place is where the disruptors make a certain niche process extremely easy for the customer. And they can do that because they're so specialized. And then the difference between the traditional banking services versus this new entrant is really huge. So that is where you see the trends picking up. And I think in lending, you see that particularly at the moment. So the buy now, pay later trend, it even has the word, it has the acronym. So it tells you it's starting to be bigger. And it's something which banks have to get their own reaction to. Mm-hmm. It's you can no longer think, I'm not sure it was a great idea anyway, but if somebody goes to a shop, wants to buy a new TV, sees a TV, goes back home, logs into the bank account, goes for a consumer loan and then buys a TV, people don't do that. Uh-huh. So you have to create different kind of ways to accommodate people if you want to.
Sure. Well, hindsight is a beautiful thing, and the trend of embedded finance, of course, does come with some dilemmas that we as an industry do need to find the answers to as well, doesn't it? So maybe you could highlight some of those dilemmas and, highlight where some of the friction lies as well, maybe.
Yeah, I think it's a super good question, Hannah, because indeed there are dilemmas to this. So what always concerns me a little bit is that many people are not as well financially educated as when you work for a bank. And many people don't really grasp that if they go for those buy now, pay later offers, that they are actually taking on debt. And debt you have to repay at some stage. And people don't really grasp what that means to them. And there's a lot of research by now that shows that mental health issues are really very often prompted by financial situations. So for me, that's a really big dilemma. So, it's nice to offer the possibility to people, but also, there is a duty of care for every entrant in this space. Mm-hmm. And it's a very hard one because we all know the saying, don't shoot the messenger. And we all know what happens to the bearer of bad news. But if you were to have a pop-up screaming, oh, don't do this, you cannot afford it, you will not be very popular, right? So it's really a big dilemma. How do you make sure that you actually help people to be financially healthy, but still giving them the ease in new products and services that make, when they can afford it, that actually makes it easier for them.
That's right. There's a level of responsibility there, isn't there? So, on to a slightly more positive note then. What opportunities then does it hold, and for who? What advice would you give to those as well who are sort of trying to achieve those goals? What about that?
Well, I think the opportunities here really are primarily for the customers, right? I mean, it makes their life a lot easier. All of this, so not everything has those kind of potential dilemmas. And the ease of use of those services obviously is a huge opportunity for customers. I think that is something that every player in this area really has to be mindful of. How can I make it easy for customers? And then there's obviously all the new providers that see their opportunities, but also for banks, I really think there's opportunities. So banks have a couple of things going for them. And yes, we have a couple of things that are a bit more difficult. We may have, the big bank with the legacy systems where it takes a little bit more time to implement this. But on the other hand, if you look at, for instance, ING in the Netherlands, the large majority of our customers are on our mobile app. And 75% of them log in every 1 to 3 days. So this is huge traffic. And that traffic is a perfect starting point to actually get into offering those kind of services and be where your customers are. Because merchants, they're interested in traffic. So if they can link up with a bank that provides this traffic, there are real opportunities. And sometimes, obviously you have to think about, where do I want to actually work with those kind of players, and how can I create an ecosystem that benefits our customers, but also benefits the bank. And sometimes, it's easier. We are doing this, for instance, through our subsidiary Lendico with Amazon in Germany, where we basically provide lending to merchants based on Amazon data and what they do with Amazon. But for us, it's a new market for this segment. So we're not cannibalizing anything. It's actually a really nice way to enter a new market. So there's opportunities for everybody, but you really have to find your strategy there. You find your spaces where you can play a big role.
Sure. Some good advice to end on there, Annerie, and it's good to hear a bit about what ING are doing working in this space. But look, we'll leave it there. Thank you so much for calling in and sharing your insights. It's, as I say, going to be a really big topic of discussion, so I'm glad I got you nice and early. But until next year, hopefully face to face. But thank you very much, Annerie.
Thanks very much, Hannah. It was great seeing you again and being on your show.